Hello traders, we continue to cover basic candlestick patterns and strategies that you can use in your daily trading. So today we are going to cover the strategy called Tweezer, which is a strategy that is very common in trading, and it represents one of the most reliable reversal strategies, patterns. So there are two types of tweezers, as with many other candlestick patterns. Those are a tweezer top and a tweezer bottom. So in this particular chart, pound dollar 4-hour chart, we have an uptrend. This is the first step or a condition that you must fulfill if you believe that this is a tweezer pattern in place. So this is an uptrend. Obviously you can see that we pushed higher. We pushed almost more than 350 pips to the upside, and then at the top is actually what is of our interest. So we have two candlestick, and tweezer is a two candlestick pattern. In this particular case we are talking about the bearish tweezer top that occurred at the end of an uptrend, where you can see in the first candle the bulls take price higher, close near at the highs, not at the high but closer to the high, and however on the second day the price opens, it does not create a new high. This is an extremely important condition, so we don't rally higher than the previous candle, but more or less we push lower, and the trend or the sentiment reverse completely. So the market more or less, as I said, opens and straight it goes down, eliminating the entire gains of the day one or the previous day. So as I said, three important conditions. First, it's an uptrend. Second condition would be that we are talking about two candles. First one bullish, second one is a bearish, and the second one does not create a new high when we are talking about bearish tweezer tops. And of course that everything that has been gained in the previous day must be erased with the second candle. This means that the bears are stronger than the bulls, since we close at the lows and we erased all the gains from yesterday. And as you can see in this chart with the pound dollar, we pushed lower, especially once you see the confirmation in this huge long red candle. This means that we are going to continue down, unlike some other patterns that more or less offer us a sign what is going to happen in the future. Tweezer can be traded almost immediately. As soon as you have the close of the second candle, you can actually put in a trade, put your stop loss above the highs, and then look below for the first resistance, where you're going to take your profits off the table. So this is, as I said, pound dollar chart. Look again, after we correct here, we have again one minor uptrend. We go from 38.50 to 40.70, so more than 200 pips. And at the top we have a long bullish candle, but the second candle is longer and it does not create a new high. So one bullish, one bearish candle, but the bearish prevails, which means that again this is a reversal pattern, and we push immediately lower. On the other side, bullish tweezer bottom it occurs during a downtrend, when bears continue to take the price lower, as you can see here. So we have a downtrend clear. Look, we have a big push here from 123.50 to 122.50. So in a one trading session we push more than 100 pips, but at the bottom what we have is a reversal, since the second candle, the bullish candle, opens at the bottom. It does not create a new high. It erases all gains from the previous candle, and then starts pushing higher, creating higher highs. So again we are talking about about the reversal in the price action, and as it is the case with the bearish tweezer pattern, in this case, if you're looking to enter into the trade, you think this is a reversal. Tweezer is a quite reliable pattern, reliable reversal pattern. You enter into the trade, you put your stop loss below the previous low, and then you look, depending on your risk management, what are you trying to get. It depends. For example, let's see this example. So if you wanted to trade, you can see that the price stopped here at this low. So if you have entered here after the candle has closed at 22.55 until 22.95, you could have 40 pips take profit, while your stop loss will be 20 pips. So 2-to-1 risk reward is in this particular trade present. So again, Tweezer is a reversal pattern. It's a common one. You can find it in your everyday charts. It's extremely also reliable on daily and weekly charts, and it shows that the market is reversing. It's a reversal pattern. Market is reversing, and then you can start thinking about entering trade to ride the upcoming trend.